we have got a booming economy with what's arguably the best job market in half a century. Yet the big payroll processors have spent the last 6 months trading sideways. Consider the case of Paychex, Cramer fave, which is the payroll processor of choice for small, medium-sized businesses with a rapidly growing human resources outsourcing division. While the stock is up more than 31% year-to-date, it's pretty much flatlined since June, even though the economy's in better shape. Some of that's because the Fed cut interest rates. That takes money out of Paychex's pocket because they collect interest while they wait for you to cash your check. Still, the company reported a terrific quarter 2 days ago. It's a classic beat and raise with tremendous strength in the human resources division, and after initially rallying $2, the stock ended up closing down. So is the stock really gathering its strength before making another move higher next year, as is usually the case? Or is there some other thing that is making it tread water? Let's check in with Marty Mucci. He is the president and CEO of Paychex. To get a better sense of the quarter and where his company is headed, Mr. Mucci, happy holidays and welcome back to Mad Money.
Thanks, Jim. Happy holidays. Great to be here.
Okay, so Marty, I go over this quarter, and I said, that's it. Since Oasis, whatever, we just got to call this a human resources company that also issues paychecks and advises companies on how to handle complex issues involving payroll, benefits, insurance, and HR. Isn't that the way I should think of it?
Absolutely. I think the only thing you left out was it's become much more of a tech company. You know, we've talked about it. That's the way service has gone. It's technology and our innovation that we've done over the last 5-6 years in particular, and the products we've introduced have really positioned us well to be an HR tech company of the future for our clients. Well,
the reason I mentioned this, Marty, and I'm glad you confirmed that, is because there are still analysts who, after a quarter's reported, say things about a different division, well, that the Fed cut rates or that there's something slowing in this in a PEO division, and they're missing the point, which is you are becoming more cloud-based and you're becoming less sensitive to the actual growth of the economy, even though it does matter, which is why they don't understand stock goes down and then spends the next 3 months going higher. They don't understand it, Marty. Is that something that you can change?
Well, we try, Jim. You know, we talk on the call very much the last few calls about the technology, the innovation that we've produced. This month, we just put out pay on demand. So our clients, their employees, can now take out their pay as they earn it. And not only is it like some other companies where it will go in their bank, but it can go on their Amazon or PayPal account. It can go direct deposit. It can go on their pay card. And we have a lot of data analytics that are being used by our clients now to help them retain and hire people and engage them in their businesses. So it's a lot more about tech, which is exactly what the clients and their employees are looking for.
At the same time, there are mistakes that people are going to make without paychecks. The papers were filled with articles today, Marty, about the significant changes coming to retirement plans. Frankly, I found them too difficult. I didn't understand what's going to happen in my 401k. I didn't understand the IRA cap. I didn't understand what to do and could easily make mistakes if I didn't have someone who would understand. Would I be able to go to Paychex and say, what the heck does this mean?
Well, absolutely. Retirement business has been one that we've been in for well over 20 years. It's very solid. It's one of the constant growers of 7 or 8% a year. And the new Secure Act that is going to be passed here, completely passed, is something that gives tax benefits to clients for not only participation, but in initially setting up a 401k. And we think that that's going to be a great help to retirement savings. We're going to help our clients. Tax benefits are going to come to them. Not only that, but Jim, I think I've mentioned before that our mobility app now, being used by our clients' employees, they can sign up and participate in a 401k of their employer with as little as 4 clicks. And that is helping participation rates. That's making it a better plan for the employer as well.
Okay, now, you know, I use Paychex in many of my different companies, and my employees say that they wish that the login system was a little easier. Now, they're not young, they're not millennials, okay? They found it a little cumbersome, and I think that they just feel like that it's too hard. Employees in their 50s and 60s like me are still a little, we need help. Can you make it a little more simple for us?
Well, yeah, I think so. And in fact, we now have automated answers to questions. If you have any questions when you come on the app, And we've now introduced this month short videos. So it may be that millennial generation that looks for that, but we can give you the answer. We can give you a step-by-step on how to do something. We can also give you a short video that shows you how to do something if you're looking for your check stub, your W-2, or if you're the client and looking at how to process overtime or something like that. And we always are trying to make it easier. We're getting a 5-star out of 5 on our mobile app, so we're feeling good, but we're always trying to make it simpler. That's what Paychex is all about.
That is great, and I do, and my employees will thank you, especially for the video. All right, let's speak about the economy. I saw that you are now we're getting now more employees per company, but we're still not getting the company formation that I certainly would feel in a more optimistic time. I'm wondering whether the country's pessimistic even as the existing companies grow.
Well, I do think, what we saw in the Paychex Small Business Index last month was the highest wage growth, 3.1%, that we've seen since 2011. And we've also seen the hours worked per week are up the highest in 3 years. So I think both of those are showing a stronger economy. The wages are going up because I have the demand as a small business and I need the employees. And the wages are up across all wage earners. It used to be minimum wages driving it. Now every level of wages are seeing an increase. That means there's demand, and I'm paying more for my employees to hire and retain them because I've got the demand. I think that bodes well for a strong economy.
Well, let me ask you, I'm not political, but I watched a debate last night, and some of these candidates, I don't think that people can save. If you are getting that kind of increase, and we got all these new rules that to me make it easier to do a 401k or an IRA, do you expect the saving rate to go up?
I do. I would think so, because you're getting the wage increase. I think we're seeing that retirement plans, as we mentioned, are going to be easier. They're easier to sign up for. They're easier to participate in. You have much more flexibility. I do think the savings are going to go up, but I think that the consumers, the confidence is pretty solid, and I do think businesses are feeling like the demand is there, so they're going to continue to pay the wages. The job growth is flat, but an increase, but it's still there. So I do think it's a good economy for consumers and for small businesses in particular.
Well, I'm going to leave it at that because I like that optimistic note. It's also actually empirically correct. Thank you so much to Marty Mucci, President and CEO of Paychex. Good to see you, sir.
Thanks, Jim.
This stock goes down every time for the same reason I told you, which is that the analysts don't get it, and then it keeps rallying. That's how it goes up 30%. That's why I remain steadfast that it's a buy, and I've felt that way since the stock was in the 30s. They have money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.